With a slowing economy and real estate losing momentum, you're probably wondering about the future of Toronto real estate in the coming year. Now, I do want to give credit to Desjardins, who has gone the extra mile to analyze various economic scenarios, ranging from a mild slowdown to a 1990s-style recession, and seeing how they would affect Toronto's real estate market. Now, I've also combed through all of this in order to share with you my insights and then how you can position yourself strategically in Toronto's real estate market. Here in Canada, inflation is slowing down and people are spending less money, so we're definitely entering a weaker economy for the rest of this year and next year. And it's starting to look pretty different from the US. In the US, people are still spending, and a significant part of this difference could be how much more sensitive we are to the housing market here in Canada. Our mortgage rates were lower than the US during the pandemic, and so the impact of these higher interest rates end up being bigger. And the other thing is that our maximum mortgage term is 5 years, whereas US homeowners have 30-year mortgages, which obviously also contributes to our higher sensitivity to mortgage rates too. So based on what the Bank of Canada forecasts, our economy will get weaker sooner, but it's also expected to recover sooner. And because we're seeing more sensitivity in Canada to higher interest rates, it actually gives us more clarity into what's happening to our economy, which leads to Desjardins' report and arriving at their base case. Now, Desjardins' base case is based on the Bank of Canada and a few other sources' forecasting techniques, which expects us to see slower growth but no recession. And if that happens, they do expect Toronto prices to go up by 5% in 2024 and another 5% in 2025. A part of the strength does come from the base case expecting interest rates to come down slightly in 2024, but the main reason is because of the huge imbalance of supply and demand in housing dynamics in the short to medium term. We are seeing huge immigration as a big factor and also record lows in terms of available housing supply, and housing starts are also not looking good. And so all of this forms the strong basis for support for home prices. Now, in Desjardins' worst case scenario, we might see a 1990s style recession. And if that happens, housing prices might come down by 16% in 2024 and even more in 2025. But this is actually highly unlikely because fundamentally, we're pretty different from the 90s. Back then, available housing levels were much, much higher, and there's no way to hit that in the next few years because there's typically around a 3-year lag between housing starts and housing creation, and our current housing starts just won't hit that level in the next couple of years. Honestly, this is not something any of us want because this would also mean huge job losses. We're looking at 500,000 jobs lost in Ontario by 2025 if this happens. And even with such gloomy numbers, housing prices would still only hit 2020 levels next year and 2016 levels in 2 years' time. To be honest, we're in the camp that a recession is just as likely as the optimistic case that the Bank of Canada is predicting. And so Desjardins' average recession case is also something that we're looking closely at. Now, if this happens, Desjardins thinks that Toronto home prices might drop by 5% from July 2023 values, which would then bring us back to where they were at the beginning of 2023. So not much of a change. And then after that, prices might start to go up again. Not as much of a change there too. They also have a best case scenario, which presents some incredible growth. But honestly, I think we're all more concerned about downside price risks, which actually don't seem so bad after all. And so once you do combine this with our extremely slow market these days, fewer buyers, and a spike in listings, we're in the strongest buyer's market since the global financial crisis, and that is a huge advantage if you are looking to buy today. It's obviously a much more comfortable experience because there's not as many bidding wars around, firm offers aren't really a thing anymore, and honestly, you can very likely get much better than 5% discounts on the market, and that's going to beat the recession price drops in Desjardins' recession case. We also know that trying to predict where prices go is very hard, and as real estate investors, we like to focus on strong rental income and positive cash flows instead. Now, because interest rates are so high, sellers will have to drop the price of investment properties until cash flows make sense for investors to buy. So yes, we are seeing many more deals in Toronto with positive cash flow now, even though interest rates are high at 6% or more. For example, there's a 2-story house in a prime area in Toronto that's probably now going to sell for $1.3 million. Right now, it's currently divided into 3 units, but one of them doesn't have a kitchen. So the plan here for us would be to add a new kitchen to make the 3rd unit fully functional, and we'll also make some other changes as well, like adding more rooms in the basement and doing some cosmetic upgrades overall to get the most rent that we can. Now, all of this is going to cost around $80,000, and this is going to take around 3 months to do. But once we finish all of this, we can potentially get a total rent of $9,000 a month, which means that we make around $7,700 per month after operating expenses. Now, if you do want to reduce the risk of interest rates going up in the medium term, you can get a 3-year fixed rate, which is around 6.05% right now. And as you can see, this will still give you very strong positive cash flow of $1,500 per month. The fact is that we have a supply issue in Toronto, and it's going to stay this way for a few more years because not many new houses are being built right now, and that's going to give support to both prices and rents. Interest rates are also likely peaking and possibly coming down a bit next year, so there's also a good chance for more upside on cash flows here too. The reality is that there might be ups and downs in the short term, but we're probably going to see smaller fluctuations as we get more clarity on the market. There will be price gains in the long run, and there are huge benefits in getting into the market today because of our buyer's market. And so, if you're interested in getting started in real estate investing today and you need help, just get in touch with us. We're not your usual real estate sales brokerage. We're all about investing in houses in Toronto that give you strong rental income. What this means is that not only will our sales team help you find the best opportunities to invest in, we'll also be around to put you on the right track if you're looking to do renovations to help you maximize your returns. So if you want to see what kind of opportunities are out there, just reach out and book a time to chat by heading to this link right here. If you found this video helpful, please give us a thumbs up and subscribe to stay updated with our content. Our channel covers a wide range of real estate investing topics in Toronto, and we offer services like planning, analysis, buying and selling, renovations, leasing, and property management to help you make your real estate investing journey easier. Don't forget to check out our website and connect with us on social media. Thanks so much for watching, and we'll see you in the next video.